All right, traders, good afternoon. This is Christian from Hertz Trade Group, and it is Friday the 14th. So wrapping up for the week. Wow, what a reversal of a reversal of a reversal this week. It's just kind of crazy price action to end the week. Clearly no follow through and very tricky. Very, very tricky. I thought today I was caught in some positions today. I even was looking for some things that could that were holding up very well yesterday that could have some further upside today. That clearly did not happen today. And, back to, what this market has been so far in 2022, very tricky and a lot of traps. And I think today you could probably consider it a trap. Look at the performance on the left side of your screen over here in terms of names that were down from the open. It's almost, if you watched my video yesterday, you remember that this whole column was green. Everything was up, considerably. And just to go through the list, starting with some of the worst areas of the market. I usually go through the indices first, but don't worry, we'll go through those. But it's just amazing to see the price action like this flip one way to another. And steel names at 4.7%, semis down 5%. The pot stocks, they are what they are. They're underperformers. Clean energy got hit really hard today. A couple new developments. I think I don't like to really talk too much about this ETF because there's so much going on with what it is, but the ARK Innovation ETF, I think, took out the lows. Well, that's a closing low. Yeah. So, I mean, we could start seeing some levels being taken out at this point, but that's a new development today. I haven't seen that break the lows. So there you go. You got the ARK Innovation ETF down 5.7%. You could flip that chart upside down. And if you're long this SARK, I think you have almost a bullish engulfing. It's amazing that even though it's 1-for-1, the charts look different to me, right? This was in May, and SARK actually took out the high. So again, with leveraged and inverse leveraged, and this one doesn't have any leverage, I'm pretty sure. I think it's just inverse, but they do what's called daily rebalancing, which is why the chart's going to look a little bit different. But yeah, I mean, you can of course play these things both sides, but yeah, again, different looking charts, same securities, but ARK does take out the lows. Okay, so I want to get off this subject, but I thought I would mention it. Look at the performance for the day. Once again, Q's trailing. They were down 3%, SPY's down 2.2%. The Dow was down 1.2%, and the small caps, which have been holding up really well, not so much today. They were down 2.6%. So we'll go through some of these charts. The VIX, interesting, not a really big day in the VIX, but as I've said before, and I think I ended yesterday's video talking about not so much the chart of VIX, but the overall level, which I think is important. We're at a very high level in volatility, and again, like I don't want to rehash yesterday completely, but that was one of the things that stood out to me. I was like, well, this VIX is still above 30. And it didn't really sit right with me. It just means, again, to me, that while the VIX is this high, right, the market has a ton of volatility, and until it really gets below, I would say 25, trading differently, I think you have to kind of think about it in those terms, with that much volatility, day trades work really well. Swing trades, not so well, unless you're really timing this market pretty well, because the fluctuations are just very big right now. So, that's kind of the main message of this video, is just to stay nimble. I would also say too, and I will go through this week's performance too, which here you have the week stats. But I would say also, one of the things that I've heard before, and I apologize because I always forget who says some of these quotes. I remember the quote, but I forget who says it. But bear markets are like, they wear you out. And I feel like after today, even yesterday, because I think most bears weren't very happy with the price action yesterday, and I think the bulls weren't obviously happy today. The bears were happy today, but I think overall it's just the wearing out process. And another saying is, once the market finally does bottom, you're kind of you have run out of the conviction to buy when it does bottom. So what I would say to traders who are watching this video, and forgetting if you're forget about if you're perma long, whatever direction you're favoring right now, I think just continue to try to stay fresh with this market. You don't want to get worn out, and you don't want your capital depleted, because on a day like this, it's really tough. So let me go over a couple of the particulars, and I usually kind of start with that. I usually have the conclusion at the end of the video, but it's Friday and I'm doing things a little bit backwards. But yeah, here was the level that I thought was pretty tricky. Usually when we see something, and I'll tell you why. It's like I felt like I got tricked on this move this morning, because we rallied, and I posted this and talked about this in yesterday's video, that we rallied up to resistance, and then what normally happens next is either you're going to get rejected or you're going to break through the resistance, right? It's an area to basically watch. And again, this is the 1 hour value area. This is the value area based on last week's volume at price. So of course, the value areas in the market webs give us really good levels to watch for the day. And, I thought we had enough of the consolidation. Here's a little bit of rejection. We try again, we get rejected. We come up here again, and so again, like, this is normal to see the consolidation at an area that where it's resistance, right? Area that you should see consolidation in. But right around the open, this is what happened, right? And it looked like we were going to, this was the 8 o'clock, actually, before the market opened. And it looked like, hey, we were going to kind of, break this hurdle. And then once the market opened, obviously this is what happened, and we broke back outside of value. And then once we started breaking, the way that this market has been going, and again, many times that we've seen this year where we've got really strong breadth for one day, you don't get any follow through the next day. And not only do you not get any follow through, it's not even, normally you would say, okay, we might digest some of the gains. Nope, you do a complete, 360 and go back to, or 180, I guess, in this case, and go back the other way. That's what this year has been all about. So, many times we've seen, hey, really good one day. So the other thing that I said besides, and again, I'm not trying to call anything that I said yesterday, they were just some things that just didn't, that just didn't make a lot of sense. The VIX was one of them. Another thing that I said too was, one day is not a trend, and regardless of how good it looks, it just is what it is. So, we'll kind of go from here. Let's just back out here and talk about the daily chart just for a second. So, two things that I would notice, that I would note here, is that we did get up to the 20-day moving average. Yes, that's a rejection. We did get back down to basically where we opened yesterday. So we're back below the 5-period moving average. This is a risk off area for me. Next thing I think to watch is whether or not we come down and take out that VPOC. So again, we had the bounce on the virgin point of control, but we've got more things down here. So again, this level is right around 35.60. That's definitely a level that I'm going to be watching next week. Also, keep in mind for next week, it's the 3rd week already of October. So you're going to get options expiration. They have been pretty tricky weeks, the options expiration. So again, it's another reason I would say, and again, I don't think I'm going out on a limb here, and I don't give advice in these videos. I'm not, this video is for information purposes only, as I get tongue tied here. It is Friday, but it's another reason, in my opinion, to stay nimble, because while October is a seasonally stronger month, there are certain periods in October that can be volatile. All right. So I think towards the end of October, that is when the seasonality is supposed to get stronger in terms of a midterm year election. Again, that is not the only factor that I rely on, but I've got it in the back of my head. Breadth, very negative for the day. Once again, it's amazing just how quickly things can kind of go back to more or less what we've been seeing a lot of. Also, Take a look. The 80% rule did get fulfilled. This was just looking at something that we go over in the trading room, but this was a no-no for the day. Once we started above the value area, broke down into it, there's an 80% chance that we go all the way through it. That's something that I said, probably about 3 or 4 times today as we broke into this. I'm like, hey, well, now we got the 80% rule. And there was a little bit of fight back here around 11 o'clock. Seems like, by the way, 11 o'clock is those times where we do bounce. If you look day by day, it's right around this 11 o'clock time frame. I know some people seem to think it's the European close. Not really, for the most part. It's normally around 11 o'clock. And then sometimes during the lunchtime hour, if there's heavy pressure, sometimes you could see a little bit of a reversal because the algos don't trade much, right? Like a VWAP algorithm trades the least around the 12 o'clock hour, right? Because again, it's trading mostly about, regarding that VWAP curve, where the majority of the volume happens around the open and around the close. And during the middle of the day, it doesn't trade as much. So sometimes you see that relief bounce when there's heavy selling pressure around 12 o'clock. Regardless, we went all the way through and we broke through the value area. Again, if you note the performance for the week, the S&P, by the way, again, it's one of those head scratchers, but we really didn't go down. For as much as there was a lot of volatility this week, we were down a little over 1% for the week, but not much difference than where we opened. Again, considering these moves back and forth, 1%, not that big of a deal, considering we were down 2.25% for the day today. All right, diamonds actually finished positive. IWM outperformed slightly. Today didn't help. Otherwise, it would have finished green for the week. The Qs, there's your underperformance. And look at emerging markets, down 4% for the week. China was down 8. The China ETF was down 8% for the week. That's a big week down for China and other areas of emerging markets. Brazil was down 6%, right? That showed a little bit of relative strength for a little while. 5.7% was Hong Kong, Chile, Argentina, a couple areas there too that were showing a little bit of relative strength for a little bit. So again, it kind of seems like the phrase that we heard a lot over the last couple of years was rolling bull market. This is a rolling bear market. We will see some areas kind of show a little bit of strength, like we saw. We saw strength in the financials this week. KRE was up 2%, but you kind of have to keep it in the back of your mind that the relative strength is not really lasting that long in some areas of the market. It's very quick in terms of, you'll see, we've seen this a couple times this year. We've seen the utilities at one point show relative strength, and we've seen what happens to the utilities. Now, again, a lot of this is interest rate sensitive, what's going on here, but the relative strength it just doesn't hold right now, and because it is more of a rolling bear market. All right, so there was the strength for a while, and the move in interest rates finally in my opinion, got the utilities. The solar group, right, which was strong for a while too, has been, I think, breaking down at this point. A lot of names just not being able to kind of hold, even though I think First Solar is still up there. I think a lot of people are looking at it as First Solar as a short, because everything else, there's a lot of names that have had this really nice strength for a while. And then once they break the 50, right, again, it's a good lesson to keep that 50-day moving average on your chart, because it will kind of give you a sense of when the name begins to change personalities. It could be great once it stays above the 50-day moving average, and hopefully once it gets down to the 50-day moving average, it bounces. But once it breaks, a lot of times the story changes pretty decently, right? ENPH was a darling for a while. Once this broke the 50, right, look fine. Even if you got out of it on this candle, right, look at it now, right? And of course, we've seen that earlier in the year with a lot of tech. Another name too, just to add, and I actually put a little bit of this on, we saw put buyer in Celsius. Again, sorry, I like this name. I like the company. And I don't want to offend anybody on the video, because I know it's difficult when we talk about shorts, things that are setting up as a short, and you may be long, but this looked like a pretty textbook textbook head and shoulders, left shoulder, head, right shoulder, and neckline, break of the neckline, had a little bit of fight back to it, but again, it failed right at the bottom of value. And it looks like it had a bearish engulfing today, and I think this thing comes down to 75. The valuation is just too high right now, right? And that's probably the last thing that I'll talk about. Well, maybe not the last thing. Two more things. We'll talk about oil for a minute. Again, if you are in a lot of energy stocks, I would be watching them very closely, right? Why? Because it looks like we have another lower high in crude, right? So again, you see me do this a few times in these charts, but here was your last peak, lower high here, lower high here, lower high here, and you've got another lower high in here. And we now break, speaking of the 50-day moving average, you got a break of that. The other one that is starting to look weak too is the nat gas. That is also looks vulnerable here, not being able to really reclaim this 200-day moving average. Now, you don't really have a sell signal here other than just below the 200, but I would be very mindful of that, all right? Because the energy stocks have gotten a bit expensive, right? And listen, I'm in a couple energy stocks too, and I think it's very important that if you're in them, you don't give back an area that you may have profits in this year, right? One name that I was looking at the end of the day was EQT, right? EQT kind of, maybe a double top here, but it's broke the value area for the month, and that could end up being a short. Remember, like the way that I invest, I know everybody's different. Some people just follow the lines on the screen, but I do look at, if I'm going to be in energy stocks, I got to see crude and nat gas be doing something good. It doesn't have to be both of them. It could just be one of them, because some stocks are geared more towards crude, oil, and some stocks are geared more towards nat gas, more nat gas exposure. So if crude decides to move lower, I think that the energy stocks are a little bit overcrowded. Okay, so we talked about next week as a monthly option expiration week, a reason to be nimble. Also, what else? The elephant in the room, we've got earnings coming up next week. So, I don't think, I don't always, sometimes I put on a trade for Netflix, sometimes I don't. I probably won't here unless I change my mind, but you could see it's, here was the last earnings where it actually went up, right? And here's the earnings history of Netflix. This is something that I always look at, not so much the numbers. I care about the price action, which is in this right column here. And notice how many times, if you look at like the last 10 quarters, Netflix has only gone up 3 times, right? That's not a very good hit ratio, right? So I usually go with the trends there. I do believe that there are trends in earnings. And this name has only beaten and rallied 3 out of the last, I believe that's at least 10 times. You got a couple back here, but as you go further back, it gets less relevant, in my opinion. So you have to think about this thing. And as always, do a little bit of a scenario analysis. What could make Netflix go up? Well, I would think more subscriber growth. Where are they going to get that subscriber growth from? I don't know. I don't have a good answer for that. And I would have to think that there might be more chance that they have not had a good increase in new subscriptions. You'll probably hear about gaming too. That was something that they've tried to crack into a little bit. And you'll probably hear about some of their entertainment. I like Netflix. I have a subscription to Netflix. I love it, right? I love some of the series that they have on there. Although I wish they would have some new shows, but that's besides the fact. But again, separate the difference between the stock and the company, right? And what they'll have to do from a valuation standpoint. Right, they have come down a little bit, but they're not cheap, right? 22 PE, estimated PE 22.6. That's not, I wouldn't call that cheap, right? Probably historically for them, it's probably cheaper than usual, but certainly it could get cheaper, right? They're going to have to say something really positive, I would say. All right, guys, that is it for the weekend video. Again, I had a positive week, but did not have a good trading day. I will show my trades no matter what, as I do that in the room always. But here you go. I day traded a little bit of JP Morgan today. I did take some targets. I had a call fly. I wish I would have taken the whole thing off, but ended up being, this is the fourth target I hit in this call fly. But a couple of trades that I tried to add today just didn't work, and I had to take them off at the end of the day. And that's it. And I really didn't do any crazy trading today, other than the day trading of JP Morgan. Again, I do view it a positive that what the financials are doing, what they're doing right now. They don't all look great, because I've heard a lot about the financial strength, right? Goldman's going to report next week. This to me is not a good looking chart. So Morgan Stanley had a bad reaction too. This was down 5%. So this stuff does not look good, right? But there are some good looking charts in financials. So it's odd, right? It has some relative outperformance to the S&P, because the S&P is going down faster than the financials are right now. But keep that in mind. Just because if you look at a relationship chart and you see one thing going up versus the other, it doesn't mean one is going up faster. Well, yeah, it doesn't mean that one is going up faster than the other. It could mean that it's going down not as fast as the other, right? So just keep that in mind when you look at relationship charts. Some strength in here, but the whole group isn't particularly strong. And JP Morgan, on the first day of after their earnings release, it did not break the 50-day moving average. So nice to see it finish up 1.6%, but certainly not that strong, and not even getting above the 50-day moving average. All right, guys, I will end it there. Have a great weekend, and I will see you guys next week. Thanks.